So in this video, we're gonna take a look at a simple but powerful candlestick pattern. And the pattern I'm talking about is the engulfing pattern. We will start the video off by taking a look at what is the engulfing pattern, how do we spot it on the chart, what characteristics are we looking for here. And then after that, we will take a look at a few real life examples and how to implement the engulfing pattern to your trading strategy. So yeah guys, I hope this sounds interesting, and without further ado, let's get started right away here. Real quick before we start here, I just have to give a disclaimer that this video is for educational purposes only and nothing in this video is financial advice. But alright guys, so the engulfing pattern, what is it? Well, we have two different types of engulfing patterns. First of all, we have the bullish engulfing pattern, and we also have the bearish engulfing pattern. And let's start here by explaining the bullish engulfing pattern, what defines the bullish engulfing pattern, and what does it mean. So the bullish engulfing pattern consists of two candlesticks. First, we have a red candle and then followed by a green candle. In some trading programs, the red candle is black and the green one is white, but the most common is red and green. And the criteria that has to be met in order for it to be a bullish engulfing pattern is that the first candle, as we said, is a red one, and the second candle is a green one. And this candle has to open below the previous red one and close above the previous red candle. And by the way guys, if you need a video on how to read candlesticks, if you are a bit uncertain in that, I actually have a video and I will make sure to link it up in the corner in the eye. But as you remember, the open of a green candle is here at the bottom, and the close of a green candle is here at the top. And in order for it to be a bullish engulfing pattern, we need to open below the red one and close above the red one. And this is, where the name comes from. The green candle sort of engulfs the previous red candle. As for the wicks, the wicks we have up here, down here, down here, they doesn't actually matter pretty much at all when it comes to the engulfing pattern. When we spot engulfing patterns, we only look at the real bodies, and the real bodies are, the fat parts of the candle. So this is the real body for the red, and this is the real body for the green. And another criteria, and this is actually an important criteria, in order for it to be a valid engulfing pattern, a valid bullish engulfing pattern, it needs to come after a downtrend or a strong move to the downside. So we have a downtrend, then we have this bullish engulfing pattern, and the hope is that this pattern will act as a potential reversal. So the hope is that after this bullish engulfing pattern, that we actually see the price reverse and continue up here again. So we can say that this is a reversal candlestick pattern. And the exact opposite is true for the bearish engulfing pattern. Here we have first a green candle followed by a red candle. And in this case, it is the red candle that engulfs the green one. So in this case, the red candle needs to open above the previous green one and close below the previous green one. And the same criteria needs to be met here. The bearish engulfing pattern needs to come after an uptrend. So we need to have an uptrend, a strong force to the upside, and then this bearish engulfing pattern hopefully acts as a reversal pattern, but this time to the downside. So the bearish engulfing needs to come after an uptrend, the bullish engulfing needs to come after a downtrend. So if we, for example, here have a price that goes sideways, and then we have a engulfing pattern, for example, a bearish engulfing pattern, in this case, the pattern is actually not that significant. So in pretty much all cases, you can ignore engulfing patterns that comes in a sideways or ranging price action. One last thing that is worth mentioning here is that the engulfing pattern is always better to use together with other technical variables. For example, you can use the engulfing pattern together with support and resistance. We will show an example of that very soon, but you can also use it with other technical variables. For example, RSI divergence, MACD divergence. You might use things such as Bollinger Bands and so on and so on. But the main thing here is that the pattern is on its own a signal, but together with other signals, it can become more significant. But alright guys, so now I think we're ready to take a look at some real life examples of, engulfing patterns and how to use them in trading. Alright, so right now we're looking at the Netflix stock, a stock you have probably heard of. And can you spot the bullish engulfing pattern on this chart? We might have multiples here, but the one I'm thinking about and the one that meets the criteria is this pattern right here. You can see we have a green candle that engulfs the previous red one, right? I hope you can see here, the green candle opens below the prior red one and closes above. So this is an example of a bullish engulfing pattern. And what also made this a valid pattern is that it actually appeared after a downtrend, so after a strong decline. Then we saw this pattern right here, and in this case it actually played out and we saw a very nice force to the upside, after this pattern right here. And what you also can see here on the chart is that we have a support line. You can see this white line right here. So this is an example what I talked about earlier in the video, that we want to use the pattern together with other technical variables. So in this case we have a line that have been acting as resistance all the way back on June 23rd here, and then multiple times as support. So we both had support, that is one bullish variable, and we also had a candlestick pattern. So we at least had two bullish variables here. That was very nice, and we could have gotten a pretty solid trend from that trade. Now let's also take a look at, the bearish engulfing pattern. So here we are on Apple stock, and this one might actually be a bit easier to spot here, but it can still be hard. The pattern I'm referring to is this one right here. And as you can see, in this case, we have a bearish engulfing pattern. The red candle opens above, but closes below the prior green one, right? So the criteria is met there. And the other criteria, that we have a strong, uptrend prior to the pattern, also is met. You can see we have an uptrend, and then this pattern appears. And after this engulfing pattern, we actually saw a pretty respectable force to the downside. So in this case, you could have made a nice short play. Shorting is basically when you bet against the market, or that you bet that the price will go down. In this case, however, we didn't have any other technical variables. We might have had a tiny bit of MACD divergence. So that is sort of almost that we have two variables. And by the way, if you want to learn more about that, I actually have some videos on divergences that I can link up in the corner in the eye. But alright guys, that's pretty much it for this video. If you feel like you got any kind of help or value, then please consider dropping a like. And if you guys are interested in more, then don't hesitate to subscribe and hit that notification bell. I hope you guys have an awesome day, and I hope I will catch you guys in the next video. But for now guys, take care. Ciao ciao.